So this is just going to be a quick video on this little rule that we're going to apply in combination to this video that I put out on the next day model. It's not my concept. It is T-Trade's concepts, the Mexim traders as well, whoever. Um, this is just a little rule that I use. Okay, so we're going to be paying attention to the first candle that hits a key level. And our key levels are going to be highs and lows and fair value gaps. That's really it. Sometimes it can be a fair value or a order block, but majority, just if you just stick to this, just external range liquidity, internal range liquidity, just keep it simple, right? Okay, so um, we're going to be paying attention to how this candle closes. The first candle that hits a key level. So the first candle that sweeps liquidity, okay? It's either going to form two ways usually. It's either going to form a bearish engulfing candle or kind of like that reversal candle, right? Um, and if it forms an engulfing candle, then we're either looking for price to displace higher immediately or take out that candle's low and reverse off of that. Now this second candle here must reverse. It must create that candle 2 in the next day model basically. It must show some type of displacement back into this candle's range, and then this candle here, the third candle, must displace higher as well. But if the first candle hits the key level, right, and has that reversal candle, long wick, close inside the previous candle's low, then I want to see this candle reverse price. And sometimes price will actually take out this candle's low, but it's the same rule as this one over here. It has to also fail to displace, right? And then the next candle must displace higher, right? In the invalidation to do so, right? Let's say this candle does not, you know, really reverse. It doesn't displace back in the range. And I don't even look to trade. This is a fractal, right? I don't even look to trade that reversal because what this logic is with this model here is I want to see instant displacement away from a key level, right? If it's with the third candle, then that's not really instant displacement, right? Um, and this also works with SMT, okay? And I'm going to show you guys some examples of that. But let's first of all go over this little example. All right, so you see this fair value gap, right? The first candle, we're not looking to trade this day, right? We're looking to trade the next days, okay? So candle one, right? Candle one reversal candle. So we're looking how it closed, right? Fails to close over the uh, key level and the previous candle's high. Long wick. So we want to frame a reversal off this wick basically. Um, Anticipate the next candle to distribute because reversal has already been printed. Any lack of displacement after candle one's close is an invalidation of this idea, right? So if this candle was like closing up here, then I really wouldn't want to frame a reversal, right? Um, so now let's go over here now, right? We have accumulation, manipulation, distributing these lows. Now, if we're going to reverse off of this key level here, we're going to do it the next candle, as you see. If price wanted to distribute lower, it would have just kept going lower and lower and lower. There's no reason for price to stop here, right? So candle 1, displacement candle. So therefore, candle 2 needs to print a reversal candle to confirm a reversal off of this sell side liquidity bridge. This is when we can anticipate a reversal because the day prior has hit the key level. Confirm a reversal with lower time frame displacement, SMT. So there's any SMT, there actually is SMT right here. I just didn't mark it because I needed this annotation to be right here. Anyways, yeah, so any lower time frame displacements, when we start disrespecting PD rates inside of this candle, all right, that's when this kind of confirms it, right? You're going to have change of state delivery, uh, displacements through structure inside of this candle or whatever. So candle 3 must continue that displacement, right? Because if this is a reversal, then this must displace, right? So manipulation, distribution, distribution, manipulation, distribution, distribution, right? And that's what you get here, right? We close over this fair value gap, and we use that support here, right? And on the higher time frame, this is when we actually can trade this candle. You see how we framing reversal off this candle? You can actually trade this candle instead of waiting for the candle too. So that's kind of the model, right? That's what makes it a little bit different than the next day model. It's still the next day model, but we're actually looking to cash this day right here. this day, and this day, if it hits a key level, right? So now let's go over some examples real quick. Okay, so this is the SMT, right? If this candle forms SMT, right? And it, again, we're using the same rule, right? If it's a displacement candle, then we want price to reverse off of this candle's low and displace back higher, right? Let me just delete that. Very simple, right? So let's go over all this price action. You're going to see the same thing happen over and over and over. Okay, let's just start with this fair value gap. All right, hold on. Gotta make this a little bit. Let's start with this fair value gap, right? Candle 1, how does it close? Displacement candle. So price needs to reverse off this candle's low. And notice how this is the weekly chart. It's fractal. So how can you confirm this with a weekly profile, right? And as you see, we can actually trade this candle. You don't have to wait. And then the next candle, right? Because we are targeting this high. All right, let's continue, right? What about these swing points right here? We can even use this order block, right? Now, like I said, I don't really just use any order block. If I go to, I'm not even going to get into it, but if I'm just going to give you this example, right? Let's just say it's a valid order block. You see how the first candle hits it? Oh no, it didn't even work. I'm capping. My bad. Don't even, just ignore that. But you said we hit this high, right? Just failed to displace higher. So these next candles, right? See how it's respecting this wick right here, right? And then this next candle, right, we displace back into the range. So although this is really not like a really displacing too much, let's go ahead and look at that because it's kind of interesting. Looks like a really ugly weekly profile, just kind of very small range. Look at even this, right? See how we hit this key level as in this fair value gap, right? We need to reverse off this candle. See how there's no real lack of displacement higher, right? So this is when you can use the model against itself, right? Now we take this high, displace back in the range. So now you just target this because there's no displacement higher. So you use that to your advantage. You want to ask yourself, what is price not doing, right? If it's not displacing, then there you go, right? You can even look on the daily here, right? If we're going to form a reversal off this, then this next day either needs to displace higher the next candle or reverse off this low. You see we do that, and this is you get easy days, like 4 days of bias, right? So look right here. We form that reversal, and look at this day, right? There's no follow through really, and this is when, well, it's really this next day, right? So we take out this high, right, up here. So where do we go? The lows, right? There's no lack of displacement towards the upside off of this low. So you just target the other side. But anyways, now what are we doing, right? We're this weekly high up here, but we can't displace over this high. So now we're using time frame alignment. So we can't displace over this high. Where are we going to target? The lows. You know what I'm saying? So hold on. Let's go back. All right, so price hits this order block. Right? If we're going to reverse off this order block after sweeping all these lows, what candle do you want to see reversal on? The very next candle. Okay? See how it displaces through the range? It's displacing above the 50% of this candle. So if I go on the daily, we want to see like inverse fair value gaps, I'm sure. Look all these highs up here. Just failure swings. Right? Look what we're doing. We're displacing through fair value gaps and stuff, right? So this is when we want to see, right, upside, right? So now let's keep going on the weekly chart. Let's just keep on going. We can go to 4 hour, it doesn't matter what time frame. So you see this fair value gap. So if you don't reverse the first week that we hit it, the next week we do, right? Same thing over here. Yeah, this fair value gap, we're looking to trade that next week, right? See how you get one-sided moves, bro. one-sided moves, displacement. That's what you want to trade. Look at this failure swing, right? If we're going to reverse, we're going to reverse off the previous week's high, right? We failed to displace, so I need to see this candle displace back into the range. And now you get easy bias, right? You get high resistance created, displacing back in the range. When you get this is when you get, right, trading back into the range, right, to the 50%. When we start displacing through the 50% of our range, well, where are we likely to go? Seek the other side. And here is the SMT. Hold on, let me pull up the other chart. Sometimes this happens between the futures charts, but you're going to see we actually run this low. Right, so if we run this low, if we're going to reverse off of this, same thing with the SMT, right? Then this next candle needs to displace higher. That's what we do. So do you see the logic? I can go back, you know, look at here. We have this fair value gap. A lot of people would think we close below the constant encroachment. It's a big, candle, right? Displacement candle. We're going to reverse this low. Well, this is when you confirm it, right? If I go to this daily chart, right, it's going to tell you very quickly what's going to happen, right? So Monday displaces, boom, displaces higher. So this automatically tells you that we're going to be bullish this week. And let's look over here, right? So when you take out this swing point here, you see how this next candle doesn't displace. So I would expect, right, continued displacement throughout the week, lower, right? So we have Thursday and Friday. I wouldn't really trade Friday, but Thursday we could, target this fair value gap, for example, or something like that. And let's look at these highs up here. So it's not to say that you can't, frame a reversal, but this is just the general rule that you're going to see a lot of times. So you see how this is the third candle that reversals? That's going to happen, this model is not perfect, right? But even this order block you see, right? We hit it the first day. If we start to displace through, so here's the thing about if you're trying to catch a reversal off this low, right? If I go to the lower time frames here, if we don't make a shallow run on this low and displace higher, then there's your bias faded, and you just flip your bias. So this is obviously, you get the 6 a.m. candle displacing to this low. Well, now we know that we're just going to go where we're not going to reverse, and we're likely to seek the other side of the range. Because if we can't displace through this high up here, we're displacing back through the range, and we're not going to reverse at the where we should reverse here, right? Then where are we going to go, right? Just sell side liquidity, which is just a weekly fair value gap, basically. All right, we can look over here. You have this swing high where we get that reversal candle. Well, we should displace lower, right? And that's what we do. We can look over here. So here's the thing about wicks. You see this long wick? If price isn't displaced to the 50% of this, right, it's still holding. We're also going to use weekly profiles. So this is what happens when Monday makes a large range, right? Usually consolidate. But yeah. And same thing is here, right? You're not just going to blindly use this, right? So see this fair value gap here? I don't know why I did that. But see how we hit this the first day? Well, as you see, we're respecting the wick of this candle, right? Because wicks are, right, gaps, right? And this is Friday, so you can't expect Friday to just continue higher because look at the weekly profile, dude. Monday, low of the week, expansion. We have a large range already, so you can't really expect the whole week to expand. So this is kind of when you have to use like daily profiles. But as you see, as long as you don't take it as low, we're still bullish, right? Does that make sense? Hopefully. All right, look, this is a good example of reversal. So this fair value gap, this is the first candle that hit it. So if this is going to hold, bro, it's going to reverse off the second candle, right? The first candle's low, as you see. This is when you use daily profiles and stuff. All right, so we have this daily fair value gap. We hit it, right? We have that reversal candle, can't displace over this high. It's also a Tuesday. So this is when you expect a classic sell week, right? You expect the next couple of days to sell off, right? Creating this huge range. And yeah, very simple, right? The next day displaces through. See this fair value gap up here? This is when you can use this to your advantage, right? So let's look here. So you see this candle here, right? Now this is a Monday, so it's a bit weird. We definitely close over it. We gap over this candle, so this could be an invalidation. But what does this candle do? Displace through it, and we seek this low. Definitely a weird. I don't know if this is like SMT here because we actually leave equal lows. Probably SMT. So if this is SMT here. Oh, let me tell you another thing. Okay. So when we hit a key level and we kind of reverse the first candle like this, see how it's a big range displacement? We're likely to not match that displacement. You're going to see this a lot. I'm trying to find an example, man. All right, let's look here. So you see this reversal off this swing point, right? We hit it the first candle. If we're going to reverse, we're going to reverse off the swing point on the second candle. See how it's a big displacement candle? It's a reversal candle, but also it distributes with a big range. See this next day, right? It can be kind of also depending on the day. If the daily profile is online, if there's no news event, right? Then we're likely not going to like displace, like continue displacement. Um, as you see here, large range, kind of get that. This is really just like a expansion. What do you call it? Retracement, reverse off the previous day's low. But yeah, you see all these stacked highs here, right? So if we're gonna reverse off this high, we should have done it here. So see how we didn't do it? So what do we now look for, right? We just look for PD arrays and premium. You just go to the next PD array because we're just gonna continue that expansion. So see how you can use that to your advantage. And you see here, we hit this key level up here, and we reverse off the first day, had that reversal candle, so next day. So yeah, this is not really a displacement candle. There's a big difference. Um, kind of a little body, and so the next day you can expect that distribution lower, and then we have a Monday open high and then low close. All right, so let's keep looking here. See this fair value gap? If we're going to reverse first day, we're going to reverse the second day. See how we fail to displace underneath this? So as long as you get bullish order flow, this is now your market maker buy model to this high. So look here, hit the key level, this order block, this fair value gap right here. See how it is a reversal candle on the first candle and distributes lower. Like I said, we're not going to match that, especially on a Monday. See this on Monday? So price, right, this is a reversal. So if the reversal got put in on a Friday, what will early week next week do? Distribute usually. So we have the large wick here. So this is just a range and lower time frame basically. And right, we get the open high. This is when you expect a reversal off this candle, right? See that? Very simple. Now let's keep going. Swing point. Even this swing point, or not so much really. Well, you can use this fair value gap. So you see this fair value gap? Right, we hit it here, and we kind of reverse this day, but I don't know what the hell happened here. It's kind of weird. And now you have a new point of reversal because this day right here forms a swing point. So if we're going to reverse off of this, see the first day, so we want to see the next day. So this is a Monday, we manipulate. And then Tuesday, if we start distributing lower, then there's your classic sell week, right? Where Monday or Tuesday's high and low of the week. And distribute the rest of the week. All right, you see these swing points up here? If we don't reverse this day, then you can expect continued distribution, basically. Off of some like projection or something like that. We can look at any of these swing highs and lows. Let's go to this fair value gap, right, or this swing low. So you kind of sweep this swing low into a fair value gap. See this candle here? So we want to see this candle, right? This is a Tuesday. Right, so that confirms your classic buy week. Right, so Monday, open low into a key level, and then high, and then we're also displacing over the weekly open and using as support. Look at this swing low here. Right, first day hits it, we want to trade the next day. See that? It's also a classic what happens like Monday. Monday open low into a key level, manipulation, rest of the week distributes. Alright, we have 2 key levels here. We really have like 3. So you have this. Right, so first day hits it. Well, if we're going to reverse this candle here, right? So that's where you target this high. You see this day hits it right here, so we need to form a reversal candle here, right, as we do. And then as long as we don't displace, basically, let me just show you real quick. Going to like the 4 hour, might be ugly here, but it's a bit ugly. I'll just show you the fractality of this model too. So it's a bit ugly here for sure, but essentially, right, let's even like look here, right? So this candle here, right? If we want to frame a reversal to this low, it should happen in this candle. You see how we're kind of bullish? We kind of displace. Like inside of this candle here, there's going to be like PD rays, and we're displacing through it. So we're likely to see this high of the range. This is just overnight session right here. So see how it's kind of just open, low, high into some news event. And then we'll look here. Right? Do you see how we hit this key level? If we're going to reverse, so this is 6 a.m. manipulation, 10 a.m. distribution, right? If we're going to reverse off of this key level, we're going to do it in this candle, right? So you see how it's fractal? You see this high, right? First candle. If we're going to reverse, it's going to be this candle, right? See how we form that reversal candle? And you kind of distribute back into the range here. You can even see it here. So if you're going to have a large fair value gap like this, oh yeah, I didn't really explain this rule either. So if it's a daily fair value gap, then you got to, confirm it with a daily swing point. If it's a 4-hour fair value gap, you got to use a 4-hour candle. The model on the 4-hour. If it's an hourly swing point, an hourly close. So you see this 4-hour swing point right here. If we're going to reverse, see the first candle. This candle must reverse off this candle's high and displace back into the range basically. And that's when you can target all these little lows. So I hope this is making sense. But yeah, you're gonna want to match, right, an hourly. So let me just go down. So here's kind of the rule, right? You're gonna frame a reversal on the weekly. You're always gonna you're gonna confirm that. So let's go here, for example. We're gonna frame a reversal or continuation candle, as in candle. And this is candle 1 that hits key level, candle 2, candle 3. We're gonna frame a reversal right here. You're gonna match it with the weekly profile, as well as candle 3. You're gonna match it with the weekly profile. If you're going to use a daily reversal, right? Let's look. So you see how we hit this key level here and whatnot. I remember there's SMT as well, like right here or something this day. So if we're gonna frame reversal this day, well, I need a daily profile to match that. And you're gonna see this daily profile here. So what does the daily profile show us? And ideally, if you're gonna catch a reversal, you're gonna have a news event. And that's what we have here. So you see a Asia London accumulation. This is one of the profiles I taught you guys. All right, so Asia London accumulation. Well, when we take out this low, right? Because remember, look at the daily chart. This is an engulfing candle, so we want to frame reversal off this previous low. And if the daily profile matches this, and we get displacement away from this with a shallow run, remember we want to see a shallow run off of the previous candle's higher low. Well, this one needs to happen, right? A daily profile supporting that. Accumulation, manipulation at 8:30, a key time, right? 8:30. So if 8:30 manipulates, what will 9:30 do? And 10 o'clock, well, they will distribute. As you see, 9:30 just goes straight up. Or sorry, 10 a.m. I think. But yeah. And this would just be simply framing an external, right? You can think of it as external, right? Back to internal this range, because the previous state displaced. And if I haven't said this already, if you ever want to trade back into a range, you need high resistance to be created, ideally. So high resistance, see, even it can be on the 4-hour. If you're going to trade back into a daily range right here, you see this daily range. And you want to pair that with a news event. So CPI, right, create high resistance, displays back into the range. A news event here, displacing or creating high resistance, manipulating back into the range here. And there's SMT here, right? So this candle creates the SMT. So if this is going to be, right, this SMT is going to hold, well, what will this next candle do? Right, this is an engulfing candle, so we're either going to displace immediately back into the range or off the previous candle's high. See this fractal? That's what we do. You can frame an internal back to internal here. Right, so it's very little systematic rule that I use. So we can go over a couple more examples, I suppose. Let's go on the 4-hour charts. So you see this 4-hour fair value gap aligned with this breaker and whatnot. See the first candle hits it, so 6 a.m., right? So we use 10 a.m. candle a lot when trading futures because that's the post 8:30, 9:30 volatility injections. When this hits key level, we expect distribution, right? So this is why it's really good fractally. You can look over here. You have this 4-hour fair value gap. Like I said, is this a reversal candle? No, so it's 6 a.m. We're going to form a 10 a.m. reversal. We want to frame it off this low. And let's go look in here. See what that kind of looks like. Right, so we take the low out, right, and then we have a CSD. It's really that simple, right? And then we can frame reversal up to these 930 highs. Now, not really a profile, to be honest, because it's kind of like a double purge. Take out these session highs, displace lower. Yeah, it's not really that clean, but you get the point, right? We can even look over here, though. So where's 10 a.m. open? 10 a.m. opens right here. So this is where you want to start to look for SMTs on the other time frames. SMT here maybe, SMT here maybe, because we want to have SMT to confirm a reversal. Right, so we hit the key level at 6 a.m. Right, you have your little consolidations here. Again, not really that great of a day. There's no news, so maybe that's why. But yeah, let's look at some hourly examples too. So let's look at every single reversal off this high. Like this is why this model is good. So let's draw every single high and low here, and this is something that you'll just notice, right? First candle hits it, the second candle needs to not continue higher, basically. First candle hits it, we displace back into the range. First candle hits it, right? Not really displacement. Maybe it's waiting for 930 or whatever, or 10 or whatever. And then we start to displace higher, right? So that's kind of the rule here. And you see here, first candle hits it, right? What's the invalidation? This candle. So there you go, right? If this was going to reverse, it should have, I mean, with this long wick, bro, we start to displace on lower time frame over this wick right here, on the upper half of this wick, well, there you go, right? This is not going to reverse out this fair value gap likely. And as you see, this is the third candle, so I don't really care about this fair value gap anymore. That's kind of like the rule, right? So every single one of these PD arrays, you can see the invalidation rule, and you see the reversal off of every single one. It's always off this second candle, bro. Every single time. Almost. Not every single time, but you get what I mean, right? You have this right here. Where do we displace? Where do we reverse off of? The second candle, we actually start that displacement. Okay, so look here. We have this fair value gap. Right, so this is when we use like logic, right? So as you see, we reverse out the previous day's low, and let's see if that's logical. By the way, I just want to see if like the previous day actually like did something. See if the previous day hit a key level. Not really. Maybe this wick. Okay, hit that 50% wick. So I don't know. Maybe I'll remember this week. Okay, but right, if we're gonna frame reversal, we're gonna use the daily profile. So we CSD here, right, after sweeping a low, we displace back into the range, right? If the previous session expanded, they don't really want to trade London, right? Because it's just expansion, consolidation, expansion, right? Just simple ipta cycles. But if we just use the rule, right? First candle here, hit the key level. Well, did the second candle reverse? No. So don't look for a reversal to these highs. As you see, we don't even do that. So now we're just waiting for the second key level to get hit, which is right here, this order block. See how we hit this key level? So the second candle is placing back in the range, right? And then this is just time distortion after 5 a.m., right? You don't even really want to trade, you know, NQ at London or Asia. I wouldn't suggest it. Just use like kill zones 830. But yeah, hopefully you guys get the point of this video. You can even look here. This fair value gap. You have a displacement in Asia. So if you're gonna ever trade after the previous set's expanded, you have to have a retracement. So retracements hit the key level with one candle. Well, I want to see the second candle, right? Displace. That's what you get. And that you don't have to wait for this candle to close. Like that's also if I didn't make that clear. On the lower time frames, when we start to displace higher, so what would be your kind of rule, right? This is where you want to look for SMT, maybe right here, right? If there's SMT here, well, I want to see us close over this up close candle, right? So maybe that could be an entry, right? You see how we hit the, let's just assume there is, I don't even know if there is, to be honest. But, right, we want to, right, what am I trying to say here? Oh yeah, we want to reverse off the second candle. So see how the second candle doesn't take out this low? And once you form a swing, basically, right, I don't want to see this low being taken because that's not a reversal, right, obviously. But yeah, and the lowest I do this concept really is the 15-minute because I can't frame a reverse off a 5-minute. I mean, maybe you can on like the second start, but I don't really do that. So you see how we hit this low, right? I want to see the second candle displace higher. So once we form this, some sort of displacement here, right? If we start to fall back in the range, this is where you're possibly going to see SMT or something. But again, right, wicks are like rejection blocks. It's only a rejection block because it's a key level. Right, so you need to see this hold, basically. Yeah. You can see up here, maybe. Right. First candle hits this key level up here. Kind of like this accumulation. So I want to see the next candle displace lower. Does that make sense? And this is what I mean by order blocks. So high probability order block. Right. We hit it with the first candle here. So I need to see a reversal off this candle. So yeah, hopefully this makes sense. My next video will be off of what am I trying to say here? My next video will be a put it all together video. Sorry, I can't talk. Let me just show you this again, right? We're gonna frame a New York reversal, right? What happens? 9:30, a key time. We run up this short-term low. What do we have up here? Session highs. So, right, the previous two sessions are just consolidating, or sorry, retracing lower. And this is where we is the New York reversal profile, right? We take out this low. It's the hourly swing point, probably. So this is where you want to see a reversal off of. And like, see, this is an hourly swing point. So like I said, you want to ideally wait for a hourly close. But if you want to be a scalper, you can't do this, right? So this is a key level, right? So if you're a scalper, right, because this, the daily profile and everything's aligned, you can use the 15-minute, not the 5-minute, okay? The 15-minute first candle hits the key level, right? I want to see a reversal off of this low. As you see, we displace back into the range. We disrespect this fair value gap. This is what you want to see in the lower time frames if you're going to catch a reversal, right? On the lower time frames, you're just going to have ranges, right? You're going to PD race the sell side of the curve, right? Draw those out. You want to see those get displaced through. Remember this that video I taught you guys about the fair value gaps that got respected on the sell side of the curve? Drag those out, right? What do you have over here? These series of Uckles candles is a breaker. You have a fair value gap, you have a swing low. So you enter on this fair value gap for your stop with a swing low, or just the breaker, or the mean threshold of the breaker, or whatever. But yeah, you can even see it right here, guys. Like, it's kind of crazy. So you have this fair value gap, right? First candle hits it, so I need this second candle to displace higher or reverse off the first candle's low. You see this swing point over here, right? See how we reverse the first candle and displace? So like I said, this next candle, it can retrace, right? Because reversal, expansion, retracement, and a lot of times you want to see a reversal off of this retracement candle's high. You're going to see that a lot. So that's another cool thing. So yeah, I'm going to wrap it up there. You can see that same logic apply here in a way. You have a swing point made. Now forget the key level thing or whatever. This is just what I'm talking about, where you have a swing point, displace it higher, and you're going to have a retracement candle. You're going to see a reversal off of that candle. But yeah, you can even see it here, right? Here's this fair value gap. I'm going to stop this here almost. So this fair value gap first candle, it's a reversal candle. Like I said, if we take out this candle's high, then we must create another reversal candle. And this candle here must displace lower. So we get that. So we get displacement lower. See this little retracement candle? We'll usually reverse off that. So yeah, you can see here again. Sorry, dude. I'm gonna stop in a minute. So you see the swing point, displacement, retracement, reverse off that retracement candle. You know what I'm saying? But that's also fractal. But yeah, I'm gonna wrap it up here. Hopefully that made sense. I don't even know what to title this video. It's just a simple little rule that I like to use. It's basically, like I said, the logic is I want to see instant displacement after key level is hit. Okay. And just because maybe we reversed or this rule doesn't work like once or twice. I mean, not every time is it gonna work. Like I said, we can reverse off the third candle, the fourth candle sometimes, but again, majority of the time, bro, you're going to see, right? You have this key level get hit, right? I want to see a reversal candle. All right, so if you're gonna trade off this reversal candle, you want to see a shallow run. If we don't get that, wait for the candle close. If we then close back into the range at the end of the day, well then now you're good to go higher. But if you're going to try to catch a reversal, you need a shallow run. Okay. So yeah, I'll leave y'all with that. Let me know what you think. And my last video probably, or my last video for a very long time, will be a put it all together video. So yeah, I'll catch y'all later.